question today, we're also focusing on a key exercise that the government undergoes every year, the union budget. Usually, the budget is seen largely as an accounting exercise. The revenues and expenditures of the government are listed out and their future policy vision laid out. But this time, the budget is crucial. The big question we're asking today, can Budget 2025 give the Indian economy the kickstart we need? First, the context. Concerns about India's economic slowdown are growing. With GDP growth hitting a 7-quarter low and forecast revised downwards, the outlook demands attention. Remember, the GDP growth in second quarter of financial year 2025 has dipped to 5.4%, the lowest ever in nearly 2 years. Adding to concerns, the Reserve Bank of India has lowered its GDP growth forecast for FY25 to 6.6%, down from the earlier estimate of 7.2%. The lower GDP numbers come amid an already growing concern about reducing private consumption, with the middle class tightening their pockets. Retailers have also pointed out towards signs of a struggling middle class, a group that forms the backbone of consumer spending. Particularly the FMCG industry has warned of muted volume growth this year owing to price hikes and inflation. FMCG majors Dabur, Godrej Consumer have already warned of a slowdown in consumer spending ahead of their third quarter earnings. But all is not bleak. While a slowdown is being witnessed in the urban areas, rural demand continues to grow. The gap between urban and rural demand is also closing, as was shown through Household Expenditure Survey, which was released last week. The difference in average monthly consumption expenditure between rural and urban households narrowed further to 69.7% in 2023-24 from 71.2% in 2022-23. Even when it comes to vehicle sales, there are indications of a small car revival, with Maruti Suzuki recording its first small car sales growth in 20 months, pointing perhaps to a rural recovery and more spends at the bottom of the pyramid. With all of this, the big question today is how much trouble is the Indian economy actually in? Is this a temporary blip, as the Finance Minister Nirmala Sitharaman has said? More importantly, what can the budget do to kickstart the economy? With that, let me introduce our speakers for today. Rahul Bajoria, Head of India and ASEAN Economic Research at BofA Securities, joins us on the show. I'm also speaking with market veteran Ajay Bagga. Welcome to both of you, and thank you so much for joining us on the first episode of The Big Question. Rahul, let me begin with you. And I spent some time setting up the context of where we are. I want first your assessment as you see the state of the Indian economy and whether you think the last GDP numbers we saw, were there a blip? Are you worried?
Thank you, Tamanna, and very happy New Year to you and to your viewers. So I think it's important to get the context right. So, we have come through over the last few years through a fairly turbulent period, and despite that, the recovery out of the pandemic has been reasonably strong, and it's kind of showing signs of a fairly broad-based nature of recovery. Now, in that context, in 23-24 fiscal year, growth rates were surprising significantly on the upside. And what we are effectively seeing is a reversal of some of that dynamic, with excess savings in the system, particularly in urban areas, kind of starting to fade out. Policy tightening both on fiscal and monetary side having a negative impact, and then income growth also normalizing. I mean, is there a need to panic? I don't think so, but is there a need to also worry? I would say a little bit yes, because what we really need to see is that in the next 2 to 3 years, with the balance sheets being reasonably clean on the private sector side, both for corporates and for the banking system, household debt levels, while rising, still remain very low from a historical context, especially when we look at our peer countries. And so India needs to prioritize growth, at this particular point in time. With that particular dynamic, I think the budget becomes a very important exercise in terms of at least improving the sentiment. Now, from a 5.4% growth print, is that a natural steady state? Absolutely not. Already, partly because of festive spending, but also because of some recovery in industrial indicators, we are seeing growth momentum, particularly in high frequency data, improving. but it is still not at a point where we would say that, we are close to our trend growth rates of close to around 7% as the RBI has been flagging. So I think there is a need to do something as far as policy is concerned, but there is also no need to be very, very despondent as far as the new year outlook is there.
Very well put, Rahul. So we need to do something. What is that something then becomes the question. And also you've balanced it well, that there's no need to be despondent. The fact is, though, there has been a slower growth clip than was expected. Let me come first to Mr. Baga on the basic question. Is this a blip in your view?
5.4 was a blip, but we won't grow as fast as we have grown. I would agree with what Rahul just said. The problem is that the compounded inflation has made the food basket quite expensive. There is not that widespread an employment generation that is needed, which would put more wage earnings into the economy. And with the monetary tightening, which started 1.5 years back, and we have not had any cuts. In fact, liquidity also has tightened despite the CRR cuts. There has been an overall slowdown. But I would say it's still a blip. It can be addressed. But rapid measures will be needed both on the fiscal and monetary front.
So, just on that point of employment, and I'll come back to you, Mr. Baga, on that, because the latest EPFO payroll data is showing an improvement in those numbers. Now, this is always a tricky one. The employment bit is always a tricky one because there's government data, there's EPFO data, and then there's private data coming in. Are you seeing employment as a concern, wage growth as a concern, or the amount of savings and amount of discretionary spend as a concern?
No, I would say the amount of savings and the discretionary spending, aggregate demand is down, but then when you cut it down to the second order, why is that down? The capital owners have done very well in the K-shaped recovery from the COVID times. The owners of the factors of production have done well, the labor has not done well. So when you're not able to increase the absolute level of wages, then the good way out is to create labor-intensive works, be it public works, be it private capex, bring in things like that, which generates employment and puts more money out into the economy. So I would say aggregate demand is down. Second order is that much employment has not got generated, nor have wages gone up as much as the inflation would have warranted. The government has done a good job in terms of the safety net with free food and other safety nets in place. We are not seeing starvation. We are not seeing those kind of things. But if you look at the government reports also, the amount of migration has reduced from the rural areas. So clearly that employment generation in the urban India is not happening, and the urbanization that's required at the pace that is required is not happening. And because of the K-shaped, Tamanna, the top 15-20% of the economy is doing very well. And that has masked the rest of the economy. But I would suspect that there is a big portion, big tail of the economy, which is not doing so well.
So the K-shaped recovery is something that we hear very often. And Rahul, before I come to you to the question on what should the budget do, I want to understand your take for our viewers on what is this K-shaped. Because we've been hearing about this K, it was a W first during COVID, then now it's turned into a K. And the sense is, the basic premise is that the rich are getting richer and spending more, the poor are spending less. So premium goods are moving faster than, say, basic soaps and shampoos and oils, etc. Are you seeing any clear evidence of this K-shaped in India? And what, in your view, is the K-shaped recovery in the Indian context?
Yeah, so Tamanna, I mean, this K-shaped recovery narrative was largely a function of the savings differential, that kind of built up during the pandemic between the haves and the have-nots. And, as Ajay rightly said, that the government played a very important role in kind of putting a floor on the degradation and the deprivation of livelihood, that kind of came through during pandemic or could have resulted in significant losses. But what we are seeing now is that there is a convergence as far as income growth is concerned between the upper echelons of the employment generation scheme and also at the bottom of the pyramid, right? So you are seeing that convergence, but obviously it's a function of that, okay, you can have higher income growth at the lower levels, but that goes into more basic consumption of necessary goods. I think what we really see is that the discretionary spending items are where, you are starting to see either capacity issues or you are starting to see a lack of interest in consuming because a lot of that consumption has been front loaded as well. I mean, what has also not helped is that in the last, say, 3-4 months, we have had a lot of equity markets, down performance, which is also having maybe some negative wealth effects within the system, which is not something that we have seen in the past cycles. So I think while, the K-shaped recovery has been converging back to each other, that convergence has sort of happened on income levels, growth rates, but the level of incomes are so widely different that it will not, result in complete offset of that downward momentum in urban consumption being completely offset by, the recovery in the rural consumption side. Where we end up is slightly weaker growth rates, but, there will be a firm bottom as well as far as consumption growth is concerned. So we are not particularly worried about consumption really slipping downwards, and that's visible in the GST numbers as well. But it's the discretionary high value adding consumption which seems to be taking a step back, which is more a function of front loaded consumption plus the fact that you have had income growth normalizing back lower into high single digits.
Okay, so it's a well-rounded picture. Let's come to the point and the moot question then, Rahul. We're talking about what budget 2025 needs to deliver, and I started by saying that budget usually is more of an accounting exercise. This time round, I would say markets, investors, economists, everyone is paying much closer attention than ever to the budget. First of all, would it be fair to say that? In your view, what would you like to see as a very clear policy push at a time, if I was to contextualize it, that we're going to embark into the second term of Trump? We have a China which is really pushing every policy move in the book to boost up its economy.
Yeah, so Tamanna, I think if we take a slightly longer view, I think the priority has been twofold as far as, the last few budgets, especially in a post-pandemic context was there, that there was a lot of focus on trying to repair the balance sheet, right, which, we have done a very good job in consolidating our fiscal deficit without compromising the quality and the quantity of spending. It is only in this year that the execution, particularly for public capex, has been very weak. And so I think a very immediate issue is that while fiscal consolidation is an important process and we are at the last mile of that consolidation cycle to below 4.5%, and I think that will happen, we also need to make sure that execution of public capex, particularly the high value adding and the multiplier generating capex projects, does take place. And so from a growth revival perspective, I think we don't need to see too much being done from the government. As long as they are meeting their targets and they are able to execute, I think that in itself will be a huge positive compared to what we have seen in the last 8-9 months. I think the other issue will be, the certainty around tax regime and, providing a clear message that, India is not going to tinker around the tax structure. I think even there's been a fair amount of commitment. We have not seen the big top line taxes being changed for a while. I think as long as that continues, it will again provide a reasonably strong impetus. I think there also will be some amount of pressure put on the private sector to also take the leap of faith and effectively invest and participate more vigorously in the India growth story, because the balance sheets continue to remain clean. And I think that probably is the biggest tailwind and the biggest source of strength as far as India is concerned in the current global macro and the uncertainties that are around. And so if we are going to see, significant uncertainty from an external standpoint, we still need our private sector to step up and basically invest, particularly in the high employment generating areas. And I think that could be a bit of a clarion call that the government might give, that look, we are providing you stability and clarity and transparency. Why don't you take the initiative as well and start investing on your side?
A very interesting comment recently by the chief economic advisor on profitability in the private sector increasing, companies' balance sheets becoming more robust, but the salary increases being very, very anemic and not keeping up. Maybe that's one push that needs to come in as well. Mr. Baga, in your view, what is the one focus that the budget should have and the finance minister should have to spur the economy back?
You have to address the consuming classes. What Rahul said very clearly, you've given the safety net, but that, if you see the cash with the public has increased. So even the rural surplus has gone back into savings or repaying loans. It's not really going into consumption. The consuming class, or for lack of a better word, but a very widely abused word, the middle class, which is paying your taxes, which is supporting the entire economy, they have not got much. You are given a 5,000, 10,000 rupee increase in some allowance. That doesn't really move the needle. What is needed? And then the government says there is no money. You are anyways borrowing 16 lakh, 17 lakh crores. Go ahead and borrow or reclassify. You're not able to spend even 10 lakh crores of capex. Last year we had 50,000 crores carried forward. This year we will probably have 1.5 lakh to 2 lakh crores carried forward. The projects that are stalling need to be energized much faster. But bigger than this, the PLI scheme has worked very well. But what have we done there? We are making mobiles, we are making electronics in the higher end again. Again, in the 15-20% of the economy. What is needed is something like textiles, which is more mid-tier, where, with the issues in Bangladesh, with the capacity issues in Asian countries, you can step in there, give PLI. If you look at the Chinese PLI, if you look at subsidies in Chinese companies' balance sheets, they are about 10 to 15 times the Indian PLIs. So our PLI is a successful policy measure. We need to make it order of magnitude if we have to take on the Chinese in manufacturing. So high labor intensive areas, more mid-tier, put PLI there. Second, put more money in people's pockets for the consuming class. Don't tell them it is your lot. Because you earn 15 lakhs a year or 20 lakhs a year, you have to pay these high taxes and then you have to pay GST. It's coming like an Aurangzeb tax. Aurangzeb's time was 57 to 60% was the total tax somebody paid on everything. If you add up a salaried person's tax at a 30% marginal tax plus GST, you end up paying 50-52% kind of tax. 50% is the tax you're paying every time you're taking your car or your two-wheeler out. Now, somewhere you have to give some kind of relief. The third is what the government has gone back on. When Chidambaram brought in STT, it was told that there will be no long-term gains, no short-term, no long-term gains because we are bringing in STT. Now we have STT. We have GST, we have all kinds of other things happening. Plus, you have a short-term and a creeping long-term gain. That has also something which has hurt the FI sentiment. So what Rahul said very clearly, you have to put a stop to this creeping tax. Today, Mohandas Pai has tweeted, Tamanna, worth playing that later on in a later program. He showed how the tax disputes have risen from 4.5 lakh crores to, I think, what I recall, 11 or 12 lakh crores today in the last 10 years. Now, and that is what is happening, that the assessing officers, especially in faceless assessments, they just put anything that they want, knowing fully well that this will go to appeal and the appellate will, just remove it. But there is no consequence for that faceless assessing officer. And nobody else is waking up to that, but it ties up a lot of the working capital for the small businessman, small player, who gets to be the subject of this. So faster projects, more money in the consumer classes pockets, treat the investors who are now a big cohort. If you add 4 family members per investor, it is 20-30% of India is an investor today.
Yeah, absolutely. The investor is no longer fringe player, is a big player. This is what markets also will be looking at. Maybe some relief on taxes and more clarity and pressing the accelerator on capex is some of the things that definitely can be done. We'll of course have many more of these conversations. We're just kickstarting the season into our budget coverage. But for today, thank you so much, Rahul Bajoria and Ajay Bagga, for speaking with us on this leg of the show. Well, with that, it's a wrap on the big question for today, but do reach out to us. Tell us what you want to see covered on this show. We're waiting to hear from you. Thank you so much for watching.